I'm of the philosophy that Chair Powell is looking for a reason to stay, quote unquote, higher for longer. And I think, as he said, as Waller has said, his chief lieutenant, and John Williams has said, head of the New York Fed, they want to maintain higher interest rates throughout the rest of 2023. Again, for the last 40 years, we're used to the Fed being either on or off. We're not used to the in-between of the Fed simply maintaining a very tight stance. But I think that that's the goal right now. I think that's the goal inside of the Federal Reserve, and they'll hide behind any data that allows them to be tighter from what real-time data would suggest they should be. I don't think they should go 50 basis points next week, but that doesn't mean that they won't use the excuse of headline data to do so.
Danielle, when you look at the price action in the regional banks in today's session on the markets, does that tell you that the recession is real and the resilient consumer that we've heard so much about is now running on fumes?
You are, in fact, I look to New York Fed data on consumer delinquencies, whether you're talking about credit cards or auto loans or anticipations via Standard & Poor's Global Intelligence that they see delinquencies rising in the next 12 months, well beyond what prior records had been prior to the pandemic, prior to the great financial crisis. And you're seeing a manifestation, especially in the small to mid-sized banks, that you just put the chart up there. They have much more exposure to commercial real estate vis-a-vis the largest banks that you've got on the screen right now, who are not as deep into bad performing loans in the future as the small and mid-sized banks are. And I think that with some of the blowups that we're seeing that are undeniable in the U.S. banking system and some of the unrealized losses that are becoming losses as we see insolvencies rise in financials, that's what we're starting to see. And these are the things that I think will be increasingly undeniable, harder for Chair Powell to look past, even if he's looking to macroeconomic data. There's nothing that you can do when it comes to, the banks are signaling that losses are in train, that the bankruptcy and default cycle have already begun to unwind.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.